Good afternoon, Britain. It's 25 minutes past 12. Now, according to estimates from the Bank of England, 3 million UK households will see their monthly mortgage repayments jump by more than a quarter within 2 years.
Yes, the central bank claims the typical person looking to refinance their mortgage over the next 24 months will see monthly repayments rise by £180, meaning the average annual mortgage bill will rise by more than £2,000. In contrast, those with a variable mortgage rate will likely see their monthly repayments decline by the end of this year.
A story of two halves there. Well, to discuss this further, we're joined by mortgage advisor and broker Sally Mitchell. And Sally, I suppose, thinking logically, mortgage rates went up. We're expecting them now to come down, but all while they're up, even if they do come down fairly substantially, there'll be many people who got their mortgages when the rates were aberrationally ultra low. And so it will feel like a rise.
Yeah, absolutely. It is a rise. I've been dealing with clients coming off these lower rates for the last couple of years, and it's a shock every time they have to remortgage. I see, an increase of £400-500 sometimes a month on some mortgages. And that's, a big shock to the system. And of course, in a time where everything is costing more, it's not just your mortgage, it's every bill that you have to pay has gone up.
Of course, you're a mortgage advisor. For those families who might be seeing £400-500 extra a month, what advice would you give them? What can they do?
Well, there are a few tricks and tips, if you like. The longer the term that you pay your mortgage off over, the lower the monthly rate. It does mean that you pay more in interest over the long term, but if it's really important that your monthly rate comes down, the amount you pay, then that can be an option for some people. I encourage, if you have any savings, potentially to look at making overpayments so that your initial capital loan actually comes down, and that can make a big difference. With some clients, when I'm remortgaging them, because they've employed these tactics, their actual monthly payment is pretty much the same. But of course, you have to have that spare cash and ability to overpay, or the time in your life to take on a longer mortgage term. If you're heading towards retirement in 25-30 years, it's not always going to be very easy to do so. So it's tricky. You need to speak to a broker and get the best advice, really.
Absolutely, but that is fascinating that for many people who will be on these lower fixed rates, perhaps for the next year or two, overpaying now might well save them later down the line.
Yeah, it really does. I mean, when you're being offered good savings rates, because of course, when you have higher interest rates, that does benefit savers. It can be slightly unpopular to suggest that instead of gaining some income from those savings, you're putting it against your mortgage. But really, debt is not a comfortable place to be, and I'm all for trying to minimise that exposure wherever you can. And let's not forget, rates will potentially, I'm sure, come down in the next few months, but they're not going to come down to what a lot of mortgage customers have been used to. The 2.5, even maybe 1.2% that we have had historically. So you've got to hedge your bets for the future. And I think the most important thing is don't get obsessed with the actual rates. Be obsessed with how you can afford them, because that is the key. Over a long-term mortgage, 20-30 years, you're going to have some ups and downs. You've got to be able to ride it out, and you've got to box a bit clever and, just sort of sort it according to your budget and your affordability.
It's interesting you say that. Before we came on air, Tom and I were talking. I took out a mortgage last year, and I know that you're about to do a similar thing. And for younger people who are trying to get onto the housing ladder, it can be a really scary thing, particularly if they're hearing in the news about rates fluctuating and that they're higher than they have been for so many years, and they're not used to being at this rate. What would you say to young people who are looking at taking out a mortgage for the first time?
Yeah, you need some really good advice. I would say always go to a broker. I know I am one, but you've really got to play the field, if you like. What I find with first-time buyers at the moment is that they've heard about these lower rates. Their parents have probably enjoyed them, but they don't actually have any experience of them. So they're not hung up on the fact that they're not getting a 1.5%. That the reality is it's 4.8 or 5.2. Again, it goes back to affordability. What I find sadly with first-time buyers is that these days you have to be earning so much money in income to be able to get on that ladder, even with using schemes or sort of help from the government and housing authorities. We're looking at possibly £60,000 of income to get onto the ladder as a typical first-time buyer. That's an average property price. Now, there's not that many people in their 20s who are potentially earning that much. Of course, in the southeast and other hotspots, it can be even more. So we're finding people clubbing together, buying as a couple. The bank of mum and dad is being ransacked for gifted deposits. There are lots of different ways to approach the problem. But of course, with young people as well, they're used to paying, if they're renting, quite a lot. And I'm finding that actually, compared to a mortgage, sometimes the rent is the same or even a little bit more in some areas. So it's not quite such a shock. And a lot of first-time buyers come to me and say, I'm not going to pay my rent to pay someone else's mortgage. I want to put it into my own property. So we're seeing quite a lot of movement in that area. But it is true that, the average deposit you need to be able to save up is a lot, 20, 40, 50,000 pounds, depending on your property price. And that can be very hard to save for if you're renting. So again, I'm seeing a lot of first-time buyers moving back in with mum and dad to save that sort of money, because that's really hard. Again, with the cost of living, prices going up all over the place. We've had inflation.
Did that during COVID and then got that advantage. Sally, we're going to have to leave it there, but thank you very much for talking to us through this really, really important issue. Mortgage advisor and broker Sally Mitchell.